It's very hard to imagine a bear market, blue, without some FOMO, some crazy bull market. These are the people that bought here, that are liquidated here. So without these really high, crazy prices, we don't have a really deep bear market. And we're going to see this sort of steady uptrend like we're seeing right now. So in conclusion, I'm bullish. I expect at least 2x from the current 109K. And that puts Bitcoin in the range of 250K, 1 million of stock to flow model. That's what I'm expecting. And
Bitcoin's climb past 100,000 hasn't come with fireworks. No frenzy, no media hype, no stampede of retail investors. Just a quiet, relentless uptrend. It's almost unsettling how calm things feel. But that's exactly what makes this rally so different and potentially more dangerous for anyone sitting on the sidelines. Markets don't need noise to move. Sometimes the silence is the signal. PlanB, the analyst behind the famous stock-to-flow model, sees this moment as the calm before the storm. While many wait for wild price swings or euphoric headlines to signal a peak, he argues we haven't even scratched the surface. According to him, Bitcoin doesn't need a parabolic run to validate the bull case. It needs time, conviction, and liquidity. From today's level around $109,000, he sees a path toward $250,000 and even beyond, all within the bounds of his long-standing model. We haven't seen real FOMO yet. The same crowd that usually buys tops and panics at bottoms is still hesitant. That's not a red flag. It's dry powder. If PlanB is right, the real acceleration is still ahead. And when momentum kicks in, it won't be subtle. It'll be one of those moves that makes people say, I should have seen it coming. Stay tuned as we bring you more clips from PlanB's Bitcoin analysis. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
so Bitcoin closed October at $109,000. And that's the 6th month in a row that it's above 100K. So we really see this 100K that used to be resistance turn into support. A really bullish sign. Now, from high to low, this is the stock to flow at 500K. This is Bitcoin at 109K. And this is the realized price at 56, moving average of 55K. So what's next? In fact, there's a lot of people that are very bearish, and the thinking is like this. Okay, this was the halving, and we're now 1.5 years after the halving. And historically, on a year to 1.5 years after the halving, here's another halving, 1.5 years after that halving, that was historically the top, also in 2013. So 1 year, 1.5 years, there's a top. We're now at 1.5 years. So we've seen the top. $126,000 was the peak, and next year, 2026, will be a bear year. In a bear year, Bitcoin will crash to approximately the moving average realized price levels of 50K. That's the bear view. The bulls are looking at it like this. They see no FOMO, no realized price or no RSI of 80 plus, the red. They didn't see that. And so they think the real bull has yet to start. And, well, if history is any measure, then we could see at least a 2x from here. Well, the thing is, sentiment, human behavior doesn't really change, does it? It's a bull market, then a bear market, a bull market, bear market, a bull market. So they alternate. And right now we're sort of waiting for a bull market yet to come. And well, that's in fact what I'm looking for. When will I be worried? I get that question a lot. I get worried if the RSI dips towards 55 or even lower, right? And then, well, lower is the bull market or the bear market bottom. But if we really dip below the 60 towards 55, that's bad. Also, if the realized price starts converging towards the moving average instead of diverging from it, like it's doing right now, so it's converging, that's also bad. That's like here, right? That's the end of and here they start converging again, those two lines. That would be, a bear market.
Bitcoin just wrapped its sixth straight month above $100,000, turning what was once sky-high resistance into reliable support. That is not just a technical milestone, it is a psychological shift. The market isn't celebrating with fireworks, but the silence is telling. The longer Bitcoin holds this level, the stronger the foundation becomes for whatever comes next. And yet, debates are heating up. Was $126,000 the peak, or just the first chapter? Some argue the top is already in. They are reading the playbook, post-halving peaks, followed by brutal resets. According to that script, 2026 could be a cold, hard bear year, with prices revisiting $50,000. But the other side sees a different story. No retail frenzy, no overheated momentum, no parabolic RSI. This doesn't look like a top. It looks like the middle of something much bigger. If history rhymes, we could still see a major leg up from here, potentially a clean 2x. What would break that narrative? A breakdown in momentum. If RSI sinks below 55, or if the realized price starts collapsing toward the moving average, alarm bells should ring. But right now, that is not happening. Until it does, the trend is intact, and the calm before the storm might be exactly where smart money thrives. While PlanB focuses on Bitcoin's calm, data-driven climb past $100,000, Jack Mallers shifts the lens to the global stage. His perspective takes the conversation from market cycles to monetary warfare, where Bitcoin and gold are stepping in as neutral assets in a world losing faith in fiat power.
From Luke, the GOAT, it's as if the most politically connected, systemically important financial institution was told the U.S. fiscal situation has reached the point where they know they'll need collateral that has a more flexible value. U.S. Treasuries can't rise much beyond 0% rates. Gold and Bitcoin can. 100%. And this morning, just in, IBM launches new Bitcoin and crypto service for U.S. institutions. IBM's digital asset haven will offer custody and payments for U.S. businesses and governments by the end of the year. The battle for collateral rages on. Huge developments, guys. Next chapter, trade settlement goes neutral. Unfortunately, we've issued more sanctions. And on the back half of how we're good guys, we do nothing wrong, we're peaceful, and everyone else is attacking us, why are you so mean to someone who's so good? I find it funny that that same week, we try and sanction a country again. And we sanction them for oil, which is just like, the world runs on fossil fuels. The world is, it's all about commercializing energy from the sun. That's the story of humanity. And one of the latest iterations of that is oil, okay? So if you sanction someone to get oil, they're not just going to die. They're just going to get oil with something else. So bizarre sanction. But anyway, deep breath. I read. Treasury Scott Bessent. Now is the time to stop the killing and for an immediate ceasefire, which, by the way, of course I agree with that. I want no human violence. I don't know if there's ever a need for justified violence at scale. Given President Putin's refusal to end the senseless war, Treasury is sanctioning Russia's two largest oil companies that fund the Kremlin's war machine. Treasury is prepared to take further action if necessary to support President Trump's effort to end yet another war. We encourage our allies to join us in and adhere to these sanctions. This came out of a meeting of Putin and other nation leaders around the same time. I want you guys to listen to this.
They are printing money. They are not manufacturing anything at all. It's printing money. And this has been one of their weapons globally. The monetary system, the global monetary system, controlled by dollar and euro, has been used. Sanctions here, sanctions there, sanctions there, grabbing this account, grabbing that account, has been one of their tools. This is not going to continue indefinitely. And we need a new financial architecture globally. not controlled by euro, not controlled by the dollar, not controlled by other currencies.
Yeah, I mean, direct quote, they are printing money. They are not manufacturing anything at all. This has been one of their weapons globally, the monetary system. We need a new financial architecture globally, not controlled by other currencies, not controlled by the dollar. I mean, neutral reserve assets will reign supreme in this new monetary era. I mean, using dollar sanctions like this on things like oil, I mean, guys, it's hard to say like, hey, you're being mean about rare earths, but then by the way, here's sanctions on oil. And we're just really, it's interesting because if you wanted to put like a conspiracy hat on, are we doing it on purpose to like escalate de-dollarization? Because obviously, what is Russia going to do? Just not get oil? Not sell oil? Not export oil? No. What? It'd be like, I'm sanctioning you from breathing and having water. Oh, okay, I'll just voluntarily kill myself. No. I'll just get water and breathe with gold, with another currency. Bizarre. But the point is, neutral trade is going neutral. Global trade is going neutral, clearly through gold and Bitcoin. So this headline hit, I think the same day, Russia authorizes Bitcoin for foreign trade and major policy shift. Russia legalizes Bitcoin for foreign trade amid sanctions, boosting crypto adoption and aiming for economic independence. So I'm not saying that Russia is now settling all their oil trade in Bitcoin, but guys, the trend is very clear. The post-1971 dollar is over. When you print money, everyone is a speculator, whether they know it or not. Okay? The way this works, money is supposed to be a reflection of your contributions to society, right? Your time and energy that you spend. That's what money's supposed to be. So you get up, you go to work. You're supposed to get money as a proportional representation of the value you created that day, that week, that pay cycle, that year. So money, therefore, is supposed to represent your time, your energy, your effort, your labor. In theory, a rich person has contributed a lot to society, and a poor person has not contributed much, in theory. Now, I say all this to say, when you print money and you debase the money, you make it weaker over time because you're diluting it, you're therefore diluting and debasing the people themselves, their effort, their time, their energy. And so it makes everyone a speculator. It's no longer good enough to just be a doctor, to just be a carpenter, to just be a plumber, to just be a teacher, to just be a therapist. You have to be all those things, whatever you do every day, and speculate. You have to do your job and figure out a way how to persist your wealth. So everyone becomes a gambler. Everyone becomes a speculator. The notion that there's investing in gambling, it's all the same thing. It's all the same. You have to do open heart surgery and then get home and understand Japanese central bank policy, monetary policy. You have to be a teacher and then come listen to this show and try and understand what China just did. It's ridiculous. That's the beauty of Bitcoin. Bitcoin protects your time and energy. It gives it back to you. All you got to do is stay humble and stack sats. Hopefully you listen to this show and me screaming for entertainment, not out of a necessity to persist the work you did earlier today. And so the fact that we're seeing a convergence, investing, speculating, gambling, it's all the same thing. Going to the casino and putting it all on red, or entering a prediction market, or picking penny stocks is all the same thing. Printing money destroys society. Because here's the thing. It makes all the doctors worse doctors. It makes all the teachers worse teachers. Because you spend half your time thinking about your curriculum for the 5-year-olds that you're teaching, the future of the world, the kids you're teaching. You're spending half your time on that, and the other half trying to speculate so that you can own a home.
The cracks in the system are no longer subtle. When one of the most powerful financial institutions starts preparing for a world where U.S. treasuries are no longer enough, you know the game is changing. IBM stepping into crypto custody isn't just a tech story, it's a signal. Institutions are preparing for collateral that can flex, move, and survive in a world where trust in fiat is evaporating. Gold and Bitcoin are rising, not just as hedges, but as replacements. Sanction after sanction, the dollar gets weaponized, and every country on the receiving end takes notes. Oil doesn't stop flowing because of a treasury memo. It just trades in a different currency. And now, that currency is becoming increasingly neutral. Gold, Bitcoin, assets no one controls, but everyone can use. When Russia greenlights Bitcoin for international trade, it isn't about ideology, it's survival. Trade is going neutral because the tools of trust have been misused beyond repair. And when money is broken, society starts to break with it. People can't just be teachers, doctors, or engineers anymore. They also have to be speculators. The line between investing and gambling has disappeared. Everyone is in the casino now. In a system that robs you quietly, real money is the protest. Not loud, not violent, just sovereign and incorruptible. As we wrap up, what do you think breaks first? The fiat system or the patience of sidelined investors? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.